Hello, I am Adam Grimes and welcome to ChartSchool. This is being recorded near lunchtime, New York time on September 18th, 2018. Our topic is evaluating whether a move is significant or not. And a little bit of context if you're finding this years later. We have had a situation where U.S. stocks have been very strong, and I can show you that. Here's the S&P 500. Much of the rest of the world has been weak over the same period. So we're not asking you to do heavy-duty analysis here. Just look at, here's China, and just look at the U.S. So you can clearly see that there is some type of divergence. What's been going on in terms of information is ongoing trade wars with President Trump imposing tariffs, and there's a lot of discussion about the relative impact of those frictions in the trade on both the U.S. and China. So the question is, China's in a downtrend here. This is pretty clearly, at least looking at your daily chart, this is pretty clearly a bear market. So what everybody is looking for is either some people are looking for the crash and for all stocks to go to zero, which is silly. Other people are looking for an end to the bear market in China. And what we want to think about is we have a little bit of a rally today. Overnight, some new tariffs were imposed, and the market, in typical counterintuitive fashion, is what would seem to be counterintuitive fashion, is responding by rallying. This is not unusual. But the question is, does this potentially end the bear market in China? And I would tell you up front, my answer here is no, there's not enough evidence. But here's what I'm looking at. So first of all, I am not a classical chartist. You will hear people use that phrase, and when they do, they're talking about Edwards and McGee, and most of you know that book, using things like head and shoulders patterns. I have not found a lot of validity in that approach, but somebody who does approach the market from the perspective of classical charting would probably notice some type of rounding bottom here. And we might also point out the potential for some type of perhaps triple bottom forming. It's clear though, and here is why I don't think of things from a classical charting perspective. I'll just draw the swings a different way here. It's pretty clear that this market appears to be kind of running out of downside momentum. If we just look at the downswings, you have these very healthy, for a bear market, downswings, and then look what happens. You have a series here where the market kind of goes into consolidation, and all of a sudden the downswings are not so impressive. They don't have as much momentum. And does this alone end the bear market? No, it does not. What do we need to see? To my way of thinking, what we need to see is significant upside momentum. A good example of this to the other side would be to go back here. And let's take this area where China was in a bull market. And so now we're looking at late 2017. So what we were looking for was the potential end of the bull market. And every one of these declines turned out to just simply be a pullback in an ongoing bull market. One of the things we could use to evaluate is to take a look at the sigma spikes. And this will very easily pull out. Just look at the bigger lines here that go beyond 2 sigmas. And a sigma spike is just the daily close adjusted for the volatility of the instrument. It's a very easy way to compare moves across different markets and to be able to say, hey, that's probably a significant move, or it's probably not that much to pay attention to. But then we start to get this here, which is here on the chart. I'll clear all the lines so you can now just look at the price structure. So this is really the first place where we saw a potential challenge to the bull market. And then what happened? Well, we ended up going higher. And then in February of 2018, we had a pretty clear and also very clear on the sigma spikes, a break of pattern. Now, that's a particularly dramatic example of end of trend, but the point is we cannot start to say with any degree of confidence that the bear market is over until we see the bear market pattern broken. The rounding bottom, the loss of momentum, and people will also point out to you there's some momentum divergences here. These are kind of classical momentum divergences where the market makes a new low and the indicator does not. We're using a MACD here. Here is another one. So this is, I've marked momentum divergences. I don't find those to be particularly meaningful because there's just, in my experience and my testing, it's not a reliable signal. So it's something that maybe we're aware of from an educational perspective. It's not something I find that useful in actual trading. So what am I looking for? I got to see a big upward price spike. It's that simple. China's up a little bit today. Is that a big move? Well, here's where I use sigma spikes. Not even 2 sigma. So, and you can see, let me zoom in here on just the sigma spikes. You can see that this maybe, if we're really trying, it slightly breaks the pattern of the last couple of weeks, but that's not meaningful. We're looking at something, this might have been a day that we needed to pay attention to. We'll go back and look at the price in a minute and see what happened. But there's nothing really here that violates the downtrending pattern that tells us, okay, hey, this the bear market is probably over. So, summary. We have potential setups for ends of trends, and I think a lot of these are sometimes captured in classical chart patterns, rounding bottoms, double tops, triple tops. I guess I should have said bottom for both, but you get the idea. Things that show the trend is starting to have trouble. You might also read these in momentum divergences. I don't, but some people like that tool. But what we really need to see to get excited about the possibility of an end of trend is strong counter trend momentum. We need to see a spike up toward the upper Keltner channel and maybe 1 to 3 really strong up days in China. Until we see that, at best, we could hope to transition into a sideways market. And at this point, the smart money is still betting on the bears. Okay, that is all I have for you. If you want to see more of my work, check out marketlifetrading.com or my blog, adamhgrimes.com. Good trading.